With Paul Lewis.
Hello. How can you best give money to children for Christmas? And why, from last week, you can no longer check whether a financial advisor is approved and regulated. But we start with a new announcement from the government last night that it's to let off 30,000 people from part or all of a controversial tax charge. The U-turn follows a critical report into how HMRC had tried to recover often six-figure sums from people it said had avoided tax for up to 20 years. They had signed up to schemes that paid part of their salary into an offshore trust, which then loaned the money back to them. The promoters who sold these schemes said the loans were not liable to income tax. The people who used them were consultants, IT workers and some nurses and social workers. Many claimed they saw little or no advantage and that fees to the scheme providers were high and offset any tax saving. Well, the government announcement, as I said, came late on Friday in response to a report it had commissioned into the so-called loan charge. Richard Bannister is one of those who'll benefit.
The report, it's a great success for all the work that the Loan Charge Action Group and the MPs, all the campaigning work that's been done over many, many months. It's great that the government have actually taken notice and listened. I'm one of the lucky ones, one of the few who are now not going to be impacted by the loan charge. So obviously now massive sense of relief.
Well, the report was prepared by Sir Amyas Morse. He's the former boss of the National Audit Office. He's with me. Sir Amyas, the loan charge was introduced to replace normal taxation. You couldn't appeal against it. It charges people sometimes back as far as 20 years. What have you recommended to change in it?
Well, the first thing, and perhaps the most substantial, is that we've recommended that it not go back 20 years. But only 10, and if you want me to at some time in the future, I'll explain why.
Yes, there was a new law was introduced around that time, wasn't it, 9th of December 2010. But although the charge won't apply, people will still be liable for the normal tax. It could be recovered from them. Well,
it could be, so long as the revenue have got protective inquiries in place. Which isn't going to be in that many cases.
And of course, you said at that time the law was very unclear anyway, so they could possibly argue that they didn't know it was not going to work.
Well, they could argue that. They could argue that.
Now, the next group, from 9th of December 2010, what's happening to them?
Well, in that case, the loan charge will still apply unless they have made full disclosure or what I've described as reasonable disclosure in their tax returns, and the HMRC have not announced an investigation. And if they haven't done those things, then they're not subject to the loan charge.
And that's because they made some sort of disclosure, but HMRC didn't actually do anything about it. And that complaint has been made by many, many people to me.
Well, if that's the case, I think it's fair that they shouldn't be subject to the loan charge. On the other hand, if they've actually not informed the revenue and held information back, that's a different matter, and I don't think we should reward that.
And what about more recent adopters from 6th of April 2016 to the present? What happens to them?
Well, in that case, they are subject to the loan charge. However, what they do get as a benefit, if I can call it that, is that as regards stacking, you know that the way the charge is calculated is taking all the years of loans into a tax charge in 1 year and thus having it as highest marginal rates. We have recommended, and the government has accepted, that this would be spread over 3 years, which should mean that the marginal rate comes down.
So the charge will be lower, and they can also spread it over more years,
That's
I think,
right.
depending on their income. And I suppose that group, you think, well, they should have known about it. They shouldn't have done it in the first place.
Well, there's a difficulty. They may or may not have understood this, but certainly taxpayers do have to be responsible for their own tax returns.
And I'm sure many people listening are saying, why let these people off at all? They embarked on a scheme that common sense would tell you was nothing more than a wheeze to pay less tax.
Well, I think when you look back at pre-2010, I think the matter was really in doubt. It was not clear from the courts or from legislation that they should take the view that these schemes didn't work. That didn't happen until later on.
Now, I know during your inquiry you talked to a lot of people who've been affected by this.
Yes, that's right.
People told you how desperate they were, threatened with losing their home, with bankruptcy. Campaigners are saying now many will still face those things. 20,000 people won't even have any reduction in their charge.
Well, that's why we recommend. I did meet a lot of people like that, and I found their testimony very convincing, I must say, and it fitted with information we were getting from other places. And I felt, I felt very moved by what many of them were saying. So just to say that first of all, that's why I was very keen that there should be further concessions on time to pay and on having a write-off at the end of 10 years for people who are earning less than $30,000 a year.
The government
Sadly, the
rejected
government
that.
have not accepted that recommendation.
Yes, but they have accepted some of them. And how certain is it that HMRC won't bankrupt people or force them to sell the home they live in? Because it said that before. You said it in your report. Will that really happen?
Well, I think it's really a question there of whether they have their coordination and information as good as it should be. And we are critical of that. We think that needs to improve.
And one final question. The most shocking figure in your report to me when I read it was that 8,000 people have engaged in these loan schemes since April this year. We know they don't work. We know it's just the promoters that are making money. Why has that been allowed to happen?
Well, to be fair to the government, they of course find these things out in retrospect. They're not in a position, they're not in the room when these contracts are being signed. But I certainly have called on the government to adopt a new and vigorous strategy to tackle this.
They often say they'll do that. Actually, one final question. What about the people who promote them? As far as I know, none has been pursued, never mind prosecuted. That's a big complaint of the people who are suffering, if that's the right word, from the loan charge. Is the government going to do more about that, or are you recommending it does more?
Well, they tell me that, I recommended it, and they say they will.
We'll have to wait and see what happens. Sir Amyas Morse, thanks very much for coming in. Well, with me are Steve and Blanche. Steve, you're liable to the loan charge, and both of you have been campaigning about it. What's your reaction to the report, Steve?
My reaction to the report, and first of all, let me tell you that I fall within that middle category, which is the 2010 to 2016 category. I basically signed up for an umbrella company for, I would like to say, ease of use. So
you work through another company, but you're actually doing the job with the company you're really doing it for?
No, I was offered a small engagement with the manufacturing company. It was a restructuring exercise, so I didn't actually or could not be directly employed by that company. So I basically looked around, and the medium for working in such a way was an umbrella company, which I signed up for.
Right, and that umbrella company was the one that paid you with a loan, or indeed got you paid by a loan rather than salary, is
well,
that right?
As naive as it may sound now, the umbrella company billed my client company, then paid me net for that net payment, which was after a hefty deduction of fees from them. I was told that I would get accountancy advice, chartered accountant advice, paperwork, accountancy, insurance, etc.
But people will be saying, you were a management consultant, you did corporate restructuring, you must have seen this with a tax wheeze.
I didn't see it as a tax squeeze at the time. In fact, I still don't at this point, because from what little amount I was earning, the net amount that I took home would have been less than any arrangement under PAYE.
So you didn't benefit from it, but clearly...
I didn't personally benefit from it, no.
Somebody did. So you've got the threat of this charge. That must have affected you quite badly. Just briefly tell me how it's affected you.
Well, let me tell you, I finished full-time work in 2010. I was under umbrella companies from 2012 to 2016, and it was only in August 2018 that I found out about the loan charge when the Revenue wrote to me. Right,
so that must have been very worrying. And Blanche, you're also with us. You've been very involved in the Loan Charge Action Group, and you've been answering people on the helpline, because a lot of people ring up wanting help. What kind of problems do they bring to you?
Well, to begin with, they're all the same. They don't know how they got into such a thing. They'd taken professional tax advice. They checked that the schemes were legal, HMRC compliant. DOTIS numbers were often given. That's where you put on your tax return that it's a declaration of a tax avoidance scheme. You say that you've given that. Absolutely.
That doesn't mean it's approved, of course, but you do warn them, yes.
And these schemes are even QC approved. Now, in some cases, we've got documentation where HMRC have accepted these. But because of the correspondence they receive, they feel criminalised, they feel shame. Many of them haven't told their partners, their spouses, their children in case they come out of university, don't want their parents to incur further fees.
And of course, they face life-changing amounts of money. Tell us the sort of amounts of money we're talking about.
Horrendous, absolutely horrendous. Anything from 20,000 to over 1 million. It's like monopoly money. The average is 600,000.
And Steve, you've also been on the helpline. What's been the sort of psychological, the emotional impact briefly on them?
On the people I've spoken to, they've been very confused, just as I was in the first instance. I found that talking to Blanche helped, and I found that then talking to other victims and sharing experiences, etc., helped them. And although it was rather a blunt truth, the loan charge did exist, at least it helped.
Steve and Blanche, we must leave it there. Thanks very much.
Thank you.
Indeed, for that.